The Real Estate Investor Summit is 30 days away, and it starts on Halloween night. It starts on October 31st, and we're having a big, massive get-together for all of our elite guests and the speakers, of course, you guys included. And I wanted to do something to make this better than any real estate conference in this country. So I went out and hired Blue Rodeo for a private concert.
Very nice.
Nice.
So Blue Rodeo is officially performing at our VIP or elite level kickoff party on Thursday night at the Delta Marriott Hotel in Toronto, which is one of the craziest things I've ever done. And it's obviously one of Canada's most storied, historic, and successful world rock bands. So they're not cheap.
Nice.
Friends, we're going to get started in just 3 minutes. I'm really, really excited to host this conversation that we're having. I asked these gentlemen to join me for this was for a really simple reason, is that each of these people has been literally a godsend to me in the last 5 years in my business, because I have been raising a significant amount of money for our resorts and hotels that we're building, and I'll save my own introduction for a little bit later. And we got to a point where I pretty well took all the money I could from my friends, family, and business associates. And I needed to find a way to go to a bigger range and to take our business to a higher level. And a dear friend that I trust completely introduced me to the concept of a mutual fund trust, which I had never heard of before until that person introduced it to me. And through that introduction, introduced me to Dwight Martin, who helped me set it up. And then Dwight introduced me to Doug and George. And Doug, who's here with us, who I'll introduce to you in a second, is our securities attorney. And he does often give me advice that I don't like, but I take it anyway. And then even worse than that is George Nast, who is our exempt market dealer and I want to say our compliance officer. And George is like my arch nemesis. I seldom like the things he tells me to do, but I do them all anyway. And what's happened, friends, behind the scenes as we've been kind of working on building our own business with the help of these men, I find myself in conversations with them all the time about things related to fundraising. And over the last, I want to say like 2 years almost now, we have seen the most atrocious things happen in Canada in real estate fundraising. And that's the failure of major businesses and I'm not going to say major corporations, because I don't know for a fact that these entities that fell apart were ever being run as proper corporations. But nonetheless, hundreds of millions of dollars in money has been lost forever. And only the authorities will ever tell us if it's misappropriation that lost the money or bad management. Nobody really knows. But I am raising significant amounts of money and putting together a team to manage that money properly. And I get to work with these three men every day. And it's because of these three men that I feel very confident in what we're doing and how much money we're raising, and that we know we're going to be able to give the returns and turn this into something really, really special. Now, in my conversations with these gentlemen, we often talk about the businesses that fell apart and the issues that have been had. And many of the conversations end up in the same places about the things that people shouldn't be doing. And recently, I started thinking about the fact that when I first got started fundraising, raising significant amounts of money, I believe I was making some major mistakes doing it. And luckily for me, I had some friends introduce me to these guys who helped me fix all of the little issues I had so that I could, number one, stay compliant, keep out of trouble, but raise money faster and get things done. And so I asked them to come here with me today and have a really good detailed conversation about this topic. And we're going to talk about a whole bunch of things related to it. For those of you that are fundraising and that are out there building real estate businesses, I promise you, you're about to hear some things that are going to make you realize that some of the ways you're going about the things you're doing right now are not just wrong, but illegal. And I'm not doing this to make you feel bad for the way you're doing things right now, but rather, if you realize that there's something you're doing that you shouldn't be doing, then take the corrective action. Like, go out there and fix it. Because real estate is the last bastion of free enterprise, in my opinion. In the last 6 years, since I really started focusing on it, I've built a portfolio that is approaching $100 million. And it's changed my life forever. And where we're going right now in 5 to 10 years, I would say at the outside 10 years, we are going to be holding one of the biggest real estate portfolios in this country. And it's all because I found these people, we did the right way. So let's get into a conversation. First person I want to introduce to you with his piece of advice is Mr. Doug McCartney. Doug is a partner with Castle's law firm based in Calgary, Alberta. His specialty is in securities law. Doug is actually relied upon as the securities attorney and advisor to a multitude of large real estate portfolios. And really glad you're here. Doug's a father, a good guy, and got a decent sense of humor as well. So Doug, say hi to everybody and your first piece of advice, if you wouldn't mind.
Thanks for having me. It's really good to be here. And before I give that one piece of advice, I want to say thanks, Ken. I'm familiar with what other people are doing with real estate networks, and I don't know of anyone else that contemplates or raises the awareness about doing it the right way, being compliant with it, right? You can help people a lot, and I think that you do with, well, here's how I go about raising it. Here's some techniques I use. But what you also say is, and here's how I do it in a compliant manner, right? So what I would say, first of all, for the one piece of advice is when you're starting out in real estate, and so everyone is either starting out or did start out, and you're going, I think one of the most common ways to raise money is with the promissory. It's certainly done all over the industry. And to do it properly, you have to realize that a promissory note is a security. And what that means is that you have to follow securities rules if you're going to issue a promissory. If you buy a share in a public company, you do that and it's compliant because it's a public company. But I think a lot of people think, oh, it's a debt instrument, and so securities rules don't apply to me. But it's absolutely a securities rule, and it's easy enough to do in a compliant manner if you treat it as a security and make sure that you have the proper documents. It may limit who you can sell to by doing it in a compliant manner, but as Ken said earlier, it's worthwhile to do it right. This is an industry with a lot of eyes on it right now, and always, and justifiably so. And if you do it in the right manner, it's a lot better for you and your investor.
Awesome. Thank you for that. Listen, to everybody that's here and the people that are going to join, as we're having this conversation, we're going to get into a back and forth between the four of us in a couple minutes. If you have any questions about fundraising that come up that you already have in your mind, or if there's any questions that come up as a result of the conversation, ask the questions in the chat and we will answer every single one of them. The next person I want to introduce you to is my friend Dwight Martin. And I have a ton of respect for Dwight because Dwight was the guy that got me on the road the right way. I was introduced to Dwight about a year ago. I think it was actually right around a year ago when we first heard about mutual fund trusts and were introduced to Dwight. And it was Dwight and his team who taught me what they were and how to set one up. Dwight is the co-founder of a company called Axiom. And Axiom is probably Canada's leading provider of help and understanding and, of course, set up for mutual fund trusts, which are probably the newest and most innovative fundraising vehicle that exists in our country. Dwight, go ahead. What's your biggest piece of advice?
Okay, well, thanks again for having me be involved in this panel. I think this is a great idea. I got a couple pieces of advice. First of all, it's never too early to start learning about how to do activities in real estate. So, sometimes I hear people say, oh, yeah, I haven't invested yet in real estate, or I only have done one investment and it was a duplex. And I find that really intriguing. It's never too early to start educating yourself. And I'm encouraged to see how many people have come onto this call because this is part of the educational process. And there's a time to bring in certain structures and there's a time to wait. And, one thing that we always encourage is that we create these structures, but you only implement them when the time is right. The second thing is, a little piece of advice is that I get a lot of people their decision making on what they do is driven by taxes. We all hate taxes. I know that. I do too. But just encourage people. The piece of advice is make good business decisions. Surround yourself with really good people, and then the tax part comes in last.
I think you will giggle at this, Dwight, but I talk about taxes all the time, and I openly say that I love paying taxes. I freaking really do. Now, there's going to be some hater on here that makes fun of me for saying that because my whole life I've just focused on making more money. And I know that I'm going to end up paying, well, I only pay 21% taxes because of some strategies I know in Canada. And of course, anybody that's here, if you come to the Real Estate Investor Summit, I might talk about it there. But I love paying taxes because it means a lot of money I'm making. I also like the fact that I'm going to be forced to buy a private jet in about 5 years. But anyway, last person I want to introduce to you is, what's the right word to see? This guy is the most anal person I've ever met in my life. But thank fuck he is, because my business is safe because of it. His name is George Nast. George is the founder of a company called Atlas One. Atlas One is a digital securities agency, but inside of that agency, George, as an exempt market dealer, has built a team of people that help entrepreneurs to raise money. In my business, what I do whenever I'm raising money is I go to, first I went to Dwight, and Dwight helped me set up the vehicle to raise the money. I start by going to Doug and saying, here's what I want to raise. And he helps me to put together the appropriate documentation. Then we send it to George, and George does a complete review of it to make sure that it dots all the I's and crosses all the T's. And then when I start raising the money, it's actually George and his team that talk to every one of those people and make sure it's all done properly. George, I'm really glad you were able to make it here, bro. What's your biggest piece of advice for everybody?
Yeah. So first of all, I echo what Dwight and Doug said. Really good that we're doing this. I love the fact that, I'm looking at the huge number of attendees. It's an opportunity for people to learn how to do things compliantly and ethically, as you mentioned in the title, on raising money. I'm going to take a little different spin because I think sort of Doug and Dwight sort of hit on them. And there is a perception that to do things compliantly in Canada is really complicated and can be very intimidating. And in some respects it is. I always joke, Canada has 13 jurisdictions. There's 60 plus different exemptions, on how you might invest. But my advice is don't be intimidated, and particularly don't use that as an excuse to be sort of willfully ignorant of it and go ahead and start raising capital without taking into account all of the compliance and securities allowing it. Don't be intimidated by it. It actually is something you can wrap your heads around with, like I said, the proper mindset as well as advice. We can do things compliant. I've seen a lot of clients who start with a compliance first mindset and manage to not be intimidated by the whole process and actually become very, very successful, because by doing it the right way, you put your investors at ease. You give them the confidence that what's going on is completely above board, and we're going. Now, as Ken mentioned, it is the job of some people like me to make sure that we don't run afoul of things, and that does take a lot of attention to detail, and the like, and that's okay. That's what providers are there for. But my message to all of you who are looking to go down this path is don't be intimidated, but embrace it. Doing things compliantly in the right way is ultimately the smart long-term move. All these people who did it unethically and uncompliantly, some may be doing well. Most have started to fall by the wayside. Those that who are still doing it unethically, they'll eventually meet some bad fate. I'm sure of it. I've been around for 30 years and I've seen this. So this is the right way to do it.
That was very polite of you.
Yeah. Well, didn't feel like going into the 67 different exemptions for investing. That would have been a real
yeah. Yeah. Well, you know what? It's interesting because AJ just asked a question. I'm going to read it to you because this is a great way for us to start our conversation. He said, what are the first few steps to getting started to raise funds correctly? We do have a few properties of interest, but need funds to move forward. So I want to put an idea on the table for you guys. And it's going to contradict a little bit of where most people, especially I see a lot of people here that know me. So where most people thought I was going to go with this conversation, but it's really aimed at somebody just getting started. So we're going to talk about the exempted groups and in layman's terms. If somebody is just getting started in real estate investing, there is absolutely nothing wrong with those people going out and acquiring a property and getting 100% of the money they need from other people. There's nothing wrong with that. And there's nothing illegal about that. In fact, the governments, all of the education, the securities agencies, the watchdogs all say you can do it, but there's rules to it. And it's if you think about it, it's actually logical. Because I'll give you an example. Let's say somebody was brand new. They were doing their first deal and they wanted to do a house flip. And they found a place in Saskatoon for $200,000. They didn't have any money. So they're going to have to borrow all that money. and then they need to put $75,000 into it. So they're going to need another 75 grand on top of that. But once they do all the renovations with the 75 grand, it's going to be worth 450 grand. So they can sell it, pay back everybody, pay the interest, and still walk away with 70, 80 grand. Somebody can just call up their buddy down the street and say, hey, I need 100 grand. I know you've got some money. Can I borrow that from you? Because it fits into the box specifically, though. And I'll start, whoever wants to jump in next, I'd love to hear all your guys' comments on this, especially the details of it, because I'm going to leave it very vague intentionally. My part of this would be helping people to understand that if you do decide to do that, you have to make sure that you position yourself in a way that people will trust you, the individual, with their money. But I don't know which one of you guys wants to jump in, but let's unpack that now. What are in that situation, like what are these exempt terms, and how would somebody have to go about it if they were just going to go borrow some money from a friend but stay compliant doing it?
Yeah, no, so there are a couple, and I think Doug, because I focus more on when you really cross the line into securities issues, but generally it's no problem to go ahead and start raising money. There's sort of two broad categories of exemptions that you can start with. One is the private issue or private company exemption, which is limited number of investors. You set up a company and you get sort of some angel or seed investing, and that can be done via borrowing, as well. And the second part of that is generally it's kind of a friends, family round. So people who you know of, or through your business or family or friends connections, can qualify that. So what I've seen in those cases is, under securities law, there's specific rules around it. Generally, it's a private Canadian company or private Canadian issuer, and it's less than 50 investors is sort of the key on that. If it's friends and family, business associates, they can invest or lend into that, type of structure. You can take some accredited investors. They do have to go through a proper subscription process, and they have to indeed be accredited. And again, so long as you keep it below 50, investors, I won't say you're generally fine, particularly if you just do it once and done. That is a good first step of starting the investment process. Where it starts to get tricky is if you do that same thing over and over again, because sometimes the securities regulators will look at you and say, okay, you're doing this second, third, fourth time, you're keeping it just below the thresholds of 50 investors, all that sort of thing. We may deem you as a continuous issuer or a regular issuer of securities. And that's when they would say, you've got to follow, the proper securities rules, or I get involved in, and Doug gets involved in, quite a bit, which is to put it into a proper framework. But that's kind of a good way, to sort of get started. And again, within a small amount of raising capital in terms of number of investors and also aggregate dollar amount, that's a good way to get going.
What I'm worried about is somebody who's brand new that's getting started. I don't want to get them overwhelmed with accredited investors and term sheets and MFTs. They literally really can go to a buddy down the street and ask them to, lend in their first deal, to do a mortgage. But they just have to be careful about how they do that, and they have to make sure that this person truly is exempt. At least that's my opinion. Now, if you disagree with that, lay it on me. Or if you do agree with it, tell me more about it.
So it's going to be debt, and you're going to enter into some sort of debt arrangement with the buddy down the street. And when George said there are 60 exemptions in 13 different jurisdictions of provinces and territories, that's all correct. But there's really only 3 or 4 that you're ever going to use, and they're pretty much identical in every jurisdiction in Canada. So in the instance that you've got there, Ken's buddy down the street, what you would do is you would probably actually do a debt instrument, probably a promissory note, but you would need to make sure that the buddy down the street has an exemption so that you can actually do that deal with him. So the person would need to be accredited, or it would actually need to be your close friend or a close business associate. If it's a neighbor down the street who you borrowed his mower once and you see he's got a nice house and new cars, but you've never talked to him, that's not going to be your close friend, and that's not going to be your business associate. If your buddy next door, you've lived there for 20 years and it really is your buddy, your kids grew up together, you've gone through the highs and lows together, and you guys have talked and been each other's homes, that likely is a close friend. If it's someone that you have done some other business with, then that would perhaps be a close business associate. And then all you need to do, because the onus is on you, you are the person that is doing the transaction, you just need to have a contract whereby that person confirms to you that they are in fact your close friend or your close business associate, or that they are accredited. And we didn't want to get into the weeds on what an accredited person is, but basically it's a person whose income is high enough that securities commissions consider them to be sophisticated and able to make financial decisions about investing on their own. That's a person with income of $200,000 for the last 2 years, or $300,000 with their spouse, or they've got assets not including their house of $1 million. And so I hope that wasn't too not layman-y, but that's really how you become an accredited investor.
Yeah.
George can speak about what kind of tests they use, because someone like Ken, who uses an EMD, when all these people come in and fill out their sub-agreements, George double checks.
Yeah. Exactly.
Right? I mean, he double checks that. But on your very first deal, like Dwight said, it's never too early to start thinking about how to do it properly. So you would have the debt instrument. If you're going to have it secured, maybe that's not a bad idea, right? So you would have a security agreement with it. And you just have a contract, but in the contract, it actually confirms what your exemption is that you're relying.
Yeah, exactly. Well, and here's another thing. And Dwight, I know you're the accountant in the group, but I know you have great opinions on this stuff too. But my point is this: if somebody is out there and they're doing their very first deal, and they need to do 100% financing because they don't have the money, they can go to their friend or their family. They're going to use a lawyer to complete the transaction. And let's say, they should always have a mortgage. You don't need to use promissory notes if you're going to do a deal like this. If you structure the mortgages properly and those are secured, it's better for that person. But my point is that brand new person does not need to go to a securities attorney and get a term sheet drawn up. They just have to understand what it means to be an exemption, what a friend, family, or business associate is. I mean, let's give brand new people a route that doesn't steer them through Doug's office, because Lord knows Doug's office is expensive, but it just puts them on a path that is straightforward and is easy for them to do,
Yes, just a couple comments I'd like to make. One is that if it's your first transaction and you're looking to have some capital come in, I'd encourage you to consider giving that neighbor down the street part ownership of how you can bring them on, use their cash. In my mind, that'd be one recommendation I'd say consider. Yes, you might be saying, well, boy, I'm going to have to give them half the profits. Well, that's part of the learning process. But you would be compliant under that scenario. I mean, the other thing too is that I do like the idea of where they are a lender with like a registered mortgage, Doug, then you kind of not lending on the property, and some of the securities rules would be not imposed on you. So that would be my only two comments to add.
Okay, Doug, I'm going to go back to you really quickly because I want to really make sure they understand this friends, family, and business associates exemption. So friends, this is what Doug said earlier in my simple Nova Scotia English. If you're out there fundraising for anything, the onus is on you to make sure you're following the rules. And to that point, ignorance of the rules is not an excuse for not following the rules. So you can't say, well, I didn't know. You can still be thrown in jail for this stuff. What the rules actually say is that if the person can get involved and lend you the money, they absolutely need to be either an accredited investor or an eligible investor. And whatever one of those two buckets they fit into, there's certain documents that have to be drawn up and certain regulations that have to be followed. But then the rules say there is an exception to this. And the exception is if this person, and they make it very vanilla the way they say it, friends, family, and business associate. What's happening now, Doug, because they say, but if they're a friend, family, or business associate, they're exempt from that. So they don't have to be accredited or eligible. And if you really know them well, they should know you well enough that they can make a good decision about that. But then you and I know what happens. Give an inch, they take a mile. You get some yahoo that met the guy 2 days ago and now he's claiming he's a friend according to the exemptions. If you were going to try and really clearly define this for the newest people that were here, what exactly is a friend, what is a family, what is a business associate, what would be your best definitions of those three exemptions?
George can also help on this one too. Family, it's not the sixth cousin Z, okay? That's not going to qualify. Your parents, your siblings, your children, I think that you're good. Those are your family, right?
Yeah, it's one degree is generally the family part of it.
What do you mean by 1 degree?
Daughter, father, brother, sister.
Yeah.
Can't be cousins?
I don't think it can be cousins, Ken. Yeah.
I've never done that. I'm trying to ask the moderator.
Yeah.
All right. What about friends then? This is the one that, that's the one that I think most people are breaking the rules.
I think, and Doug can add on this, the test that we apply, and so you should take a step back. Why is there even this exemption? There are those that believe it's too arbitrary, it's too subjective. Why did they have this exemption? The reason they have this exemption is when you invest in these types of projects, they expect you either to be sophisticated, and so that's the accredited side. You have money, you have wealth. Now we can have debate whether money and wealth equals sophistication. That's a whole different discussion, but that's kind of the assumption, right? The other part where the friends, family, business associate comes in is, do I trust the sponsor of this investment sufficiently to make this? That's actually why, one of the main reasons they applied is sort of a trust factor, kind of around it. So on the friend point is, am I going to trust investing, in this particular project? And so if you apply that test, any reasonable person would say, look, if I just met the guy and had a cocktail at a bar and he talked to me about a business opportunity, there is no way that a trust could have been built such that someone's going to write you a $50,000, $100,000 check. All right. That's really sort of the application of that. Now, securities laws, and Doug can comment, do not prescribe things like, definitions of friends and that sort of thing. That's sort of where some subjectivity comes in. And so we as EMDs do really push hard around, how long have you known, this individual? What's the extent of the relationship that you have with them, to really sort of push at it. Business associates a little more objective. You either have a business relationship or you don't. Right? That's kind of thing. And so if you do have a business relationship, again, applying the trust test to a certain extent to make sure that business relationship, is sort of deep enough such that you make that investment based on the implicit trust that you have in the sponsor of the project.
When it's the relationship based one, if you think about your family, your parents are going to trust you, and it's unlikely you're going to screw over your parent. A close business associate, so that's an interesting one too. So just because Bob in the office next door and I have worked together for 5 years, we may not be close business associates if we don't talk, and we don't talk about actual business, right? It has to be a relationship where, like Ken, I could be your close business associate and I could actually sign an exemption that says that.
Yeah.
We talk regularly. All we talk about is real estate deals. Right? Well, I mean, 100%.
That's not true. I asked you about your kids the other day.
Yeah, okay, exactly. Yeah, exactly. So that one is a close business relationship, right?
Yeah.
Where it's not just that we're, somehow related in business, but it's the nature of that relationship is that we actually talk about business, subject matter of the things that I would be investing in. With respect to your close friends, George is right, because it is, I wish that we could actually say, this is exactly what the securities commissions think a close friend is. I think I could comfortably say, you likely don't have as many close friends, except for maybe Ken, as you think you do. No, really.
Yeah, that's true.
And the securities commissions will come back and say, okay, prove how that person is your close friend. I've received letters like that. And so the company had to respond. And in one instance, the response was, this person is my best friend, since I was about 30. We talked to each other through our miscarriages. I mean, I couldn't believe they wrote this. And it was like, okay, they actually really were close friends, because they had shared enough to actually be close friends and not merely acquaintances, not passing the street and saying, how are you?
And two, there's a question in the chat from Maria Ann, friend of a friend of a friend, good?
No.
Here's another thing, is that if I am Ken's good friend, right, so I can pass that test, one of my friends who Ken doesn't know or doesn't know well won't pass the test.
No.
The relationship has to be direct.
Hey, listen, there is going to be a commercial or two in this where there's going to be a shameless plug. And so here's the first shameless plug for everybody that's here. What I want you guys to do, go into the chat right now and tell me, are you happy you showed up to this event? Are you comfortable with, are you happy about the conversation we're having? And I'd like to know if you can just go into the chat and tell me what you think about that. We'd like to know, we if we're going to do this, We want to make sure that we're adding value. These gentlemen are all speakers at a major real estate conference that we're hosting in 30 days from now. It's called the Real Estate Investors Summit. It's in Toronto, Canada, at the Airport Delta Hotel. And you can see who I have speaking at this event. We have Mr. Kevin O'Leary, Michelle Robineau from Dragon's Den, Mike Holmes, and then some really amazing real estate teachers, coaches, and experts right from across Canada. It's a 3-day event. It starts on Thursday night. The tickets range from $397 to $1997. And I'm going to stop sharing my screen again because I want to tell you this is a very exciting event for me. And the reason that it is an exciting event for me, it's because of what we're doing at it. And you heard all three of these gentlemen say that, you know, compared to other people that are doing events like this, we seem to get more into the actual details that people are looking for or they need. Maybe sometimes they're not even looking for. But I wanted to ask all of you to go and buy a ticket right now to come to this event. That's why we're here doing this. The event is going to feel like this in terms of the content. It's 3 days long. It goes Friday, Saturday, Sunday. If you buy the elite ticket, the highest level ticket, it includes all your meals every day. It includes cocktail parties every night. And on Thursday night, you're going to be invited to an elite only event that is a rock concert featuring Blue Rodeo, the band. And it's really freaking amazing. But I'm going to tell you something that I'm doing just to encourage you to buy your ticket while you're here with me tonight. As many people know, I own several businesses. And one of the businesses that I own, I'm going to share my screen again, is a company called Cottage Dream Vacations. And at Cottage Dream Vacations, we are building resorts across Canada, but we also own a little portfolio of elite level cottages. And in addition to that, another crazy business that I own is an actual gold mine in British Columbia. We have a team out there that are actually mining gold. You can check it out on my YouTube channel. The point is, we literally had our best day today. And I'm so excited to tell you this because we've been really struggling putting this thing together, but we recovered about 18 ounces of gold in one day today at our mine. So here's what I'm doing. Anybody who buys their ticket today at this event, I'm going to track every ticket that's sold from now until midnight. If you buy your ticket, if you buy a general ticket, you get 1 ballot. If you buy a VIP ticket, you get 2 ballots. If you buy an elite ticket, you get 3 ballots. What are the ballots for? Live on YouTube tomorrow, I'm going to do a draw. And one of you is going to win an ounce of pure gold and a 3-day vacation at the cottage of your choice of any of the cottages that I own. Now, that's a prize package that's worth about $9,000. All you have to do to get in on this draw is click on this link and buy your ticket to the event right now. And I'll do that draw live on YouTube tomorrow. Anyway, okay, we got to scale this conversation and what we're talking about. When they come to the Real Estate Investor Summit, we're going to talk a lot more about, you know, the exemptions and what new people can do to get started. But friends, inevitably, if somebody is really doing this the right way, Doug, especially going to the thought you just said that most people don't have as many friends as they think they have, there's going to be a point in time where somebody who's really serious about scaling a portfolio is going to have to get sophisticated. They're going to have to look at a mutual fund trust. They're going to have to look at retaining a securities attorney to help put the proper documentation together and getting an EMD to help them do this. And we won't worry about saying like, when is that? Because that's going to be different for everybody. But what I'd like each of us to do is to talk about why this route that I've taken is probably the best route you could take if you're going to build a big portfolio. And of course, Dwight, I want to start with you because your team are the creators of the modern day mutual fund trust. So maybe just a couple comments on exactly what an MFT is. And then why do you believe it's the right vehicle for people to be using in the world today?
Aptly put by yourself that at some point in time, you're going to start wanting to aggregate investors. And what the statistic is that last year, in 2022, a minor $53 billion was contributed to RRSPs in Canada. So a little bit of capital. So when you get to the point that you want to start approaching multiple investors, you want to be in a position that you can ask those investors to use their registered funds, RRSP, TFSA, etc. That is a very vast pool of capital that if you don't have a vehicle that allows you to let those investors use that, you're missing out on that opportunity. And so what we have done at Axiom is we have created structures that basically are designed for the real estate promoter and developer to access those investor funds. And so that's the big takeaway is that when you get to a point that you're going to start approaching multiple investors, those investors will be more excited to invest through their registered funds than non-registered, because if they invest with their TFSA, no tax. And I know, Ken, you like paying tax, but I think no tax is more people like to hear that better. And if they invest in their RRSP, then it's tax deferred is the word we use. They don't pay tax until they take it up.
Yeah, okay, great. Doug, maybe shed some color on as they scale. There's steps to this process. They have to become more organized about it. They have to start dotting the I's and crossing the T's. And obviously, it really starts with a consultation with you and some documents you're going to put together for them, depending on what their needs are. Why don't you walk people through that a little bit? Give them some understanding of that.
Quickly, though, in the chat, someone asked about grandparents and aunts and uncles. Grandparents and grandchildren are actually included in the exemption. Uncles and aunts aren't.
Are not, yeah.
Yeah, under family. So, I act for a lot of real estate developers at all sorts of levels along the way, and it's a journey for everybody. And I think that the person who's starting out could do it, the boring, as you described, like Dwight said, they could do it together, right? Just you've got a partner, and that's how you're going to go ahead and do it. At some point, you actually are going to worry about a couple of things. You want to make sure that you've got a legal structure that works for liability purposes. I mean, that's why corporations were created in the first place. And you are actually going to want to think about tax effectiveness, because hopefully your project's successful, and how can we get that out? So that would probably be your next step. And you would probably be looking at, I see a lot of people use corporations. That's simply because that's all they've ever heard of. You can go to any lawyer, anywhere, go to a registry office, get a corporation set up. Limited partnerships, pretty easy to set up again as well, and pretty tax effective. But what they don't have is kind of that missing link that Dwight talked about, which was access to registered funds. And I can say that, speaking from what I have seen in my own practice, where we've got issuers, private issuers, so not publicly listed entities, private issuers, a private issuer is still going to be compliant with securities laws. Those people, if they can get access to registered funds, when we start raising funds and closing on it, I bet you, and George might have a better idea on the real number, it's about 80%, maybe even 85% of the funds that are coming into these real estate projects are actually registered funds. Yep. So when Dwight talked about how much was going in there, having the right investment vehicle can help you to cast a wider net of, so if you have a close friend and business associate, that close friend and business associate, or even my parent, might not have $100,000 cash, but they might have $100,000 in a self-directed RRSP that they could put into one of my projects. So I think that was and that's in fact what you're doing, Ken, because you do have a mutual fund trust. And so when you are doing these more complicated projects and you're starting to raise money from people, an accredited investor you may not know until they become aware of your investment opportunity.
Right.
And then, so you're going to have a document whereby you're going to tell them about your project. You're still going, and that would be a term sheet, it would be a deck, it would be a corporate presentation, something like that, where you're going to be showing investors that you don't know, usually that you don't know what your project is and what it's going to look like. You would have an agreement, again, whereby you confirm what the exemption is. And depending on certain other things, if you're going to be doing it so it's RSP eligible, there would be other things that you'd want to do. You put it on a trustee's shelf, things like that. Is that where you wanted to go, Ken, or did I go off?
No, it's exactly where I wanted to go. George, what are your thoughts on this stuff?
Sort of add the compliance and exempt market dealer views. So in my experience, because we have, and I'm going to compliment my colleagues, Doug and Dwight, involved in this. It's actually a little bit easier from the compliance side. So we get, when we do a due diligence on an offering, that's one of the things that EMDs have to do. We have to actually review the project, review the governance structure. These have been created with already compliance aspect in line. There's very clear trustee for the for the MFT. There's a declaration of trust document that's quite detailed. So from a EMD standpoint, working with the MFT like what Ken has done, is more straightforward than than other offerings, just because there's a lot of extra eyes kind of involved, and that make it easier to do those kind of reviews. I think the second part of it is, I'll just reiterate what Dwight and Doug brought up. I mean, when I started this business, I was expecting most of my investors would be cash investors. I was surprised about how much money is sitting in registered funds. We've had TFSA investors that have invested hundreds of thousands of dollars into projects. And it's like $7,000 a year, and you've managed to accumulate that. Well, if they had the right investments over that period of time, then maybe that's it. So it really is such an important source of funds in capital raising from real estate. And I think it really becomes a differentiator. If you're only relying on cash investors to fund your projects, you're missing a big pool of capital.
And of course, you have to have a vehicle that allows you to do that.
And you have to have a vehicle that allows you to access that.
Okay, here's a couple questions that I want to go into the chat for. Maria here, can the line of credit that I use be used as a tax write-off?
If you borrow money personally and you lend that from a bank on a line of credit, and you invest that or lend that, then that interest that you pay is allowed to be deducted on your personal tax return. So it is a write-off because anything that is incurred for the intent of earning income, then it can be a write-off.
Here's an interesting one. This might be a George question, but I'm going to read it. Are accredited Canadian investors allowed to invest in Cuban real estate or a for-profit tourism business in Cuba?
Yeah, great question. I saw that and I was thinking about it. So the short answer is yes, but. So technically legal, practically difficult. Let me talk about the practical difficulties of that. Cuba is a sanctioned country by the United States, which makes it very difficult for a lot of financial institutions to deal with. So I actually have a policy not to deal with Cuba-related investments, not because I don't. I've been to Cuba, it's a wonderful country. But I've decided that I don't want to risk traveling to the US and get arrested by the Department of Treasury for an asset control department for facilitating sanctions breaking on that. So that's really the problem. So Canada doesn't have sanctions on Cuba, so investors are free to invest, but there's just a lot of things like how would the venture set up a bank account, right, that can remit funds to and from Canada. Well, a lot of Canadian banks just won't touch it, right, because of that problem. And so I hope that answers the question.
Here's a different question that comes out of that, though, that it just made me think of. What are the governing rules of an investment? Is it where the investor lives, or is it where the opportunity is? In other words, let's say there was a big investment opportunity in a state in the United States, and the people raising that money were talking to some people that lived in Canada. Whose rules apply to that deal?
So the rules apply to the investors. That's what securities law covers, right? Where the funds are deployed is generally much broader and much open. I'm going to not say fully open because I gave you the Cuba example. And then there are sanctioned places that Canada sanctions, like Russia, for example, or North Korea. But let's put those exceptions aside. If you wanted to set up a fund, an MFT, and invest in U.S. properties and just target Canadian investors, no U.S. investors, I emphasize that point, that's covered by the SEC and American securities law. But if you wanted to just start, that's perfectly fine. So you could really separate out where the investments and the properties are versus where you're raising the capital from.
I mean, just an add-on to that, George, is it's at where the investor lives, but also these countries have different rules and more rules maybe than we have. So you have to also conform to the rules down in the United States, for example. So, or Germany, they have their own security rules that you would have to comply with as well as an investor.
Yeah, and that's why we generally, so I'll just speak for Atlas One, we can take accredited investors from Europe, so long as they're deemed accredited in those particular jurisdictions. We absolutely take no investors from the United States. I go back to, I do travel there and I don't want to be arrested by the SEC. Right. The U.S. regulatory environment is a little more tough than the Canadian one in many respects, so we don't follow that. But so long as we're in countries in Europe and many countries in Asia, we can take accredited investors so long as they meet the accreditation standards in those countries.
Yeah.
What I was going to say was on that point, we're doing one right now with Canadian and American investors going into an American opportunity. They're going in through, the Canadians are going in through a Canadian vehicle. Yeah. The Americans are going in through an American vehicle, and the Americans comply with the U.S. securities rules and Canadians apply with the Canadian.
Yep. Very common structure I see as well is basically these are feeder funds, right? So you set up a feeder fund for the U.S. and that's usually, there's a U.S. regulated broker dealer that'll take care of that, not Atlas One, and then maybe Atlas One as a Canadian broker dealer will take care of the Canadian.
Yeah. Well, there's a question in there right now that is going to go right to Dwight, and it's probably the reason I got the most excited about the MFT. And there's a person that just said, but I could use an MFT to raise funds in Canada and do a project in India. Before you answer that, Dwight, I have to tell you, if I haven't told you yet, I probably haven't told you yet. I'm about to use my MFT on 2 hotels I'm buying in Barbados, and I'm so freaking excited about it. And the MFT is the perfect vehicle for that. So, what is it? Are we allowed to use funds we raise in Canada through our MFT for international projects?
Right. So I'm going to put a little meat around that. So first of all, remember the primary purpose of the MFT is to allow you to have people using their RRSP TFSAs to invest in the MFT. The MFT is what qualifies for them to be able to use their registered funds. And then the MFT with, you're going to have to get Doug involved in George as well, but it can invest outside of Canada. And so it can invest in the United States, even though George might get arrested. It can invest in Costa Rica, Barbados, India, so it can make, the general rule of thumb is that yes, you can use your MFT to invest in properties outside of Canada.
Awesome. Okay, we're going to stop right here. And I'm going to tell everybody that if you come to the Real Estate Investors Summit, you're going to hear more of this stuff from these men. These men are all going to be there, and they're all going to be sharing a wealth of experience with everybody. I'm going to stick around for a couple of minutes with them, guys. I want to thank each of you for being here. And hey, I started with a piece of advice. Let's finish with a single piece of advice from each of you about the future for them.
Yeah, I'll go back a little bit what I said before and just kind of build on that. Don't be intimidated. Yes, there are stuff that you need to do to adhere to securities law, but if you have a good project, you've got access to investors and the ability to raise capital, there's a lot of tools, a lot of good advisors available that can help you realize what you want to do. I see that all the time in my business, and so I really do encourage people to take those steps and do it compliantly.
Yeah, I would agree with your comment at the beginning, Ken, where I think that real estate is an excellent opportunity for people to acquire wealth. It's hard, but as long as you're surrounding yourself with people who can help you through the hurdles, I kind of agree with you, Ken, that it's one of the remaining ways that individual people can actually attain and increase their wealth.
I don't want to sound like a shill for your conference. George said something I thought that was very important there. As long as you have access to capital and an investor or investor networks, that's one thing that we didn't touch on. And Ken, I assume that you'll talk about that at your conference as well. We've talked about what you do once you've identified an investor on this call today. We didn't talk about rules for trying to find investors. There's some of those as well. But I agree with what everyone said here. If you're not a person who's going to invent the next widget or something like that, real estate really is one of the last places where hard work, tenacity, and just doing it right and can pay off.
Yeah, you're absolutely right. Gentlemen, thank you for joining me here tonight. I can't wait to see you guys in a couple of weeks at the Blue Rodeo concert at the Real Estate Investors Summit. Have a great night, fellas.
Thanks. Bye-bye.
All right. Well, listen, I want to talk to everybody here for a second, because what you just had a chance to experience from those three men is just the icing on the cake at the Real Estate Investors Summit. And it's going to be absolutely amazing. And you heard each of them. And I can honestly tell you, I did not pay them to endorse me the way that they did. But there's a lot of places you could go for education. One thing I will tell you without a doubt is if you're serious about building a real estate portfolio, you have to understand the details of fundraising and of doing the business. But you talk to anybody that is a major real estate investor and has a massive portfolio, they will tell you that your portfolio is really never going to be any bigger than your Rolodex. And that's how you build your Rolodex. It's by going to events like the Real Estate Investor Summit. And what I do with the Real Estate Investor Summit, and what I'm going to continue to do forever, is turn it into an experience. There's lots of real estate conferences that you can go to and you can learn about. But I'm actually taking my capital and making this something you'll never see again. You're never going to see a real estate conference in Canada. It's 3 days of real estate training with some of the best real estate professionals in this country. But think about who we have coming to this. We have Michelle Romanow, who is the main character on Dragon's Den in Canada. We have Mr. Wonderful Kevin O'Leary, who just became a billionaire and is the main face on Shark Tank. We have Mike Holmes. And now anybody who buys an elite ticket, you get to come to a Thursday night social event. This is the unofficial kickoff of the event. It's for elite ticket holders only. We're having a full party. It's a dinner that's being served there. And as of today, I can officially announce that we have Blue Rodeo performing at the event. Tell me anybody who has ever been to a real estate conference in Canada in their career that can say that it's been started by something like that. If you're going to buy a ticket, the best thing in the world for you to do is to click on that link that I just put in the chat and grab a ticket. Tickets start at $397, and at the highest level, they're $19.97. But we're going to sit here. Friends, click on that link I just put in the chat and check it out right now and buy a ticket. The highest, most expensive ticket is our elite ticket. It's $1,997. As part of being an elite guest, you get to sit in the front of the room at the tables. We have a private room at the event. It's the elite lounge. We have a chef in the elite lounge that's cooking all weekend. The speakers are in the elite lounge. All of the elite ticket holders get pictures with Kevin O'Leary. You get to come to our party on Thursday night and be there for our private concert with Blue Rodeo. And all of you, we have hot lunches every day. We have cocktail parties and dinner every night. All your meals are included. It's only $1,997. It's a very, very good deal. For $397, which is our basic ticket, you get to come all weekend. You get to be a part of it. The dress code is casual. You just come as you are and be a part of it. But what I'm telling you, friends, is this. I'm doing a draw. It's our early bird draw. It's tomorrow at 1 p.m. Eastern Standard Time on YouTube. It's a YouTube live. And I'm going to be doing a draw. And one person who bought a ticket, is going to win an ounce of raw gold and a 3-day vacation at one of our luxurious cottages. And check out these cottages. We're talking about elite level cottages. We rent these for $900 a night. This is one of our cottages. It's up in the Halliburtons. It is just absolutely gorgeous. It's a tiny home and a mini Nordic spa. It's freaking amazing. Another one of our cottages is on Stony Lake in Ontario. It's gorgeous. And we're going to give whoever wins their choice. And we have 3 cottages right now in Prince Edward Island. And you can use it anytime you want. 3 days and 2 nights, which is about $3,000. And an ounce of gold is another $3,000. So what we're doing is anybody who's bought a ticket up to now is going to be in the draw. But if you buy a ticket today, right now, because you're here, if you buy a general ticket, you get 1 ballot in the draw. If you buy a VIP ticket, 2 ballots. And if you buy an elite ticket, 3 ballots in the draw. It's going to be unbelievable and a ton of fun. I mean, if you look at the speakers that we have at this event, we have a couple more speakers that we still have to announce. Just unbelievable. Every one of these speakers is a major real estate investor. And oh, look, we've got Doug McCartney and Dwight Martin actually speaking live at the event. And you get to come and be a part of it. It's 30 days from now. It's the first 3 days of November. And friends, if you were excited and felt this presentation was informative, I can't even begin to tell you what you're going to get out of the Real Estate Investor Summit. Here's one more thing I'm going to tell you about. I'm going to talk to you really quickly about it because you're still here. So what we just did was went through a discussion, and you got to meet the guys that support me in my fundraising activities. In the last 3 years, I've raised over $40 million for my projects. And I guarantee you that I probably am the only real estate investor that can say this. I've created an automated system for fundraising. Listen carefully to this. What I do is I get Doug to create the offer. I get everybody sorted out. And then I do a presentation. So I run Facebook ads to a presentation, just like the way you guys are here right now. And I do a presentation for my pitch. And at the end of the presentation, I give them a link to book a call with somebody on Doug or George Nast's team who close them and get the money. After I do the live presentation, I make it completely automated. So I run ads to it every day. Every day, people are clicking on the ads. They're signing up to watch the presentation. They watch the presentation and they book appointments. Right now, as we speak, I'm spending about $500 a day, and I'm getting 50 people to watch the presentation every day. And I'm getting 10 people that book appointments, and it's resulting in 3 to 4 people a day that are investing a minimum of $50,000. So I'm raising anywhere from $200,000 to $500,000 a day for the project I'm working on right now. At the Real Estate Investors Summit, listen carefully to this. I'm going to show everybody how I do it, but somebody at that event, I'm going to do that for. I'm going to set the whole thing up like that for them for free. Also at the Real Estate Investors Summit, I'm giving away 10 ounces of gold, $34,000 in a draw to one of the participants in the audience. Vacations, trips, you name it. It's going to be unbelievable. And all you guys have to do is get a ticket to the Real Estate Investor Summit. And there's the link right there. I hope you do. I hope you were inspired by this tonight. I can promise you that I can teach anybody to build a massive real estate portfolio without a dime of their own money and following the rules and doing it correctly so that you win, so that you change your life. And what if the Real Estate Investor Summit in Toronto in 3.5 weeks from now is that event that changes your life? All you got to do is click on that link. In fact, I'm going to encourage you to click on that link right now because I'm going to finish up this presentation. I want to thank everybody for coming to this training tonight. I hope you enjoyed your time. And listen, if you really enjoyed it and you're going to come to the Real Estate Investor Summit, tell a friend about it. Let's fill the place up and have a lot of fun together. We'll see you in Toronto in 3.5 weeks at the Real Estate Investor Summit. Have a great night, everybody.